Hi there, my name is Jamal Khan. I'm a senior tax partner at Churchill Tax. Today I'm talking about transferring properties into a limited company, which is also called incorporation. This is a process through which you transfer properties into a limited company and you don't pay any capital gains tax, or you claim relief from capital gains tax. And you also claim relief from stamp duty. We do a lot of incorporations, and the main issue that people have is when you go to a non-specialist, people make a lot of mistakes. And the purpose of today's session is to make people, or my followers, people who watch this video, other accountants, solicitors, etc., make them aware of the critical mistakes that they can make whilst incorporating. Okay, so I'll share my slides. Okay, so critical mistakes during incorporation. And the reason, I mean, this is a little bit about us in terms of what we do. We specialize in tax advice, tax planning, tax investigations, dispute resolution, tax tribunals. This is our main kind of area of focus. So yes, the general knowledge about incorporation is that you have to spend 20 hours looking after the properties and managing the properties, and then you have to have a partnership, and you set up a partnership, incorporate from a partnership, and that's it. But, and this is from my experience, this is what the majority of the people know. 99% of the people think this is as simple as that. But then there is a small print before you incorporate. So the minimum hour, you have to double check the minimum hours can be easily demonstrated. 20 hours can be easily demonstrated throughout the year, not just 1 month or 2 months. I say it's 20 hours a week for the whole year. And all assets are transferred to the company. Some people I have seen people who have made mistakes. They've transferred one chunk of properties and then waited for another 6 months to get another mortgage approval, then transfer another chunk of properties. And that has been challenged by HMRC successfully, and the client had to pay a significant amount of tax. Documentation and contracts. Okay. Has it been documented correctly? Have you got all the board resolutions, the company house information ready, and everything has been updated correctly? I have seen cases. The reason I'm doing this webinar today is because I have seen cases where people have used kind of ordinary accountants to do incorporation who had no idea how to do it, and they got things wrong. The share issue is also very important. People don't understand the significance of how important it is to get this right. Company's house, updating company's house, how important this is. We're dealing with live cases at the moment where people have not done this properly and they've had to pay significant amount of tax. HMRC are regularly now inquiring into incorporations, especially where they see the incorporation was done by a company that doesn't actually specialize in tax. So this is they are inquiring. They check the time being spent on the portfolio, at least 20 hours. Were the shares at incorporation issued correctly? Was the company set up correctly? Okay, and timely. Were the contracts done correctly? Very important. A lot of people don't realize this. Were all assets transferred across? People make mistakes. Some people I've seen cases where people have not transferred a couple of properties or left out one property. Okay. What about valuations? Did you get the valuations correct? Was everything done correctly? Was the mortgage transferred? Some people don't transfer the mortgage. I've seen that as well. They say that everything is done, but they don't transfer the mortgage, or they don't tell the mortgage company. Okay. And I have seen live cases. All of these bullet points that you see here are actually live cases that have come to me from other accountants and tax advisors and law firms and solicitors, etc., where HMRC are inquiring into this. Okay, have you made the right disclosures? Consequences of getting it wrong are severe. So, for example, on a typical incorporation that has not been done properly, we look at tax liabilities of around about £500,000 plus penalties, depending on the size of the portfolio. But on average, this is what we've seen. So you can't afford to get it wrong, and you can't undo it. Once it's done, you can't undo it. Okay. Can we help at Churchill Tax? Yes, this is what we do. We do incorporations regularly. If you are looking to transfer your properties into a limited company, we are one of the few firms that do end-to-end process for you, and you simply just point us and we'll do everything for you, other than, of course, doing the conveyance, etc. But that's another point, is you can't go to any ordinary solicitor to do conveyance for incorporation. The solicitors have to have knowledge of incorporation, and they have to understand intricacies. Otherwise, they will have many problems. And that's why we always work with a handful of specialized solicitors that know how the process works, especially for incorporation. Not the tax side, but the conveyance side of incorporation. Okay, so we work hand in hand. Okay, this is me. And if you've got any questions, if you would like to talk to me about a particular incorporation, or if something has been done and you want me to check that it's been done correctly, please get in contact. Thank you very much.